The 5 key elements to credit. I know a lot of people have been talking to us about credit, and ad nauseum we talk about it now more so than ever because it's so important. So Neil and I put together what we feel are the 5 key elements to a good credit score, or to looking better from a credit standpoint. The first thing is, how long have you had credit? Neil, explain why credit history and the age of credit history is so important.
Because wherever you're applying, whatever you're buying, they look at your credit. And then they look at how long you've had your credit. So you have a credit card that you just opened a week ago, you're not showing that you've paid it on time. A month ago, 2 months ago, you're really not showing a long-term ability to pay that credit card. Yes, we tell everybody, open up a couple credit cards, but it takes a while to show that you are an upstanding citizen. That's why how long you've had your credit card, car payment, student loans, and how long you've been paying on time is very important.
It is, guys. It's just kind of like, I always use the tree analogy. The deeper the roots, the longer the history. The deeper the roots, the stronger the tree stands. So it's really important for you guys to realize, when you have credit cards, you can have those cards for a long time. So if you
do not close a credit card.
Yeah, don't close it, guys, especially if you pay it off. I don't care if you don't like it, unless for some reason it has some crazy high annual fee. Even a high annual fee, you can typically take a downgrade path to it, but don't close credit cards. Credit cards are the best tool because you can keep them the longest. We always talk about how auto loans and mortgages, they have definitive terms that end or expire. A credit card will stay open as long as you keep it open and continue to pay on time. The next thing we want to talk about is, how much credit do you have versus how much credit are you using? That is called credit card utilization. If you look on Credit Karma or even Credit Sesame, NerdWallet, any of these tools that I tell you to use, credit card utilization accounts for 30% of your score. And here's why it's important. If you have a $1,000 credit limit and you're using and have a balance of $900 or $950, that is bad. That is what's called maxed limit. When you're at the max, what happens is the credit card companies look at you as high risk. What is the probability that you are going to default over the course of the next 24 months?
It looks like you can't afford your bills.
Correct. So the best thing for you to do, now most people always say have a 30% utilization. That is not the best method or the best way to look at it. If you want to look at it this way, would you ever tell your kids to get C's in school or D's in school? No, you wouldn't. You want them to get A's. Well, an A utilization is 10%. You want to be less than 10%. So the magic number is to be below 10% on your utilization. So on a $1,000 credit card, you want to be below $100. Now, if, let's say, for example, you spend more than that per month, then pay it every week like you would your debit card.
Or pay it every 2 weeks, right?
Every 2 weeks, whenever you get paid, treat it like a debit card. That'll help you keep the utilization down. You'll never miss a payment, and you'll also never pay interest because you're always paying your cards off every 2 weeks.
It's easier to raise your credit scores by a credit card than it is a car loan.
Absolutely. Neil, that brings up another good point. How many accounts do you have, and what type of credit? I like to talk about credit diversification. Explain what credit diversification is.
It's having credit cards, having installment debt, which is a car loan, student loans, anything, any kind of loan that you took out for a term is an installment.
Or a mortgage.
Or a mortgage. A mortgage is an installment. So they like to see different types of credit. Not everybody can have different in the beginning, and we understand you might only have credit cards, but you should have 2 or 3.
And how many people have we seen that when they're trying to build their credit score, it'll tell you right on Credit Karma, if you get a mortgage, it will help boost your credit score. Now, for some people, they need to build a credit score so that they can get the mortgage, but by having account diversification, it shows the lender that you can handle multiple different lines of credit, and you can continue to pay them responsibly and pay on time.
Yeah, paying a day late is not acceptable. You know you can lose 50 to 100 points on a 25-hour credit card bill that you paid a day late. Do not pay late.
And that's 30 days late, guys. But what he's saying is by paying it 1 day past that date, you can dramatically influence your score, and it could take a year to get those points back. And so that comes to the last thing right here. You should be monitoring your credit on a weekly basis.
Every morning.
I do it every morning. Neil does it every morning. But that's because we understand the importance. And here's another thing. If you have a derogatory mark, like let's say it's a collection that you didn't know about. I always talk about I had a tax lien for $374 I didn't know existed. I had moved, and this was years ago, but when it showed up, I had no idea, but my score dropped like 97 points overnight. I couldn't figure it out. It's that important for you guys to monitor your credit on a daily, a weekly basis, because that way you always have a thumb on the pulse, you always know what's going on, and this way if anything does pop up, you can immediately take action, which again shows credit responsibility.
Paid for deletion.
Yeah, if
that happens.
If you do have something, a collection that shows up, call them up, negotiate, tell them you want to pay it in full to get it removed. Now, there's credit repair companies that are going to tell you not to pay it. I will tell you this. If you have a $3,000, $4,000, $10,000 collection, okay, fine. Maybe it's worth having a credit repair company for a couple months, seeing if they can get it removed. If you have a $100, $200, or maybe even a $300 collection, just pay to get rid of it, because with the new FICO scoring models, it shows that if you pay them off and pay them in full, it will actually help your scores. So I hope you guys found that information helpful. This is what we feel are the 5 keys to building a good, solid credit score long term. If you have questions on it, let us know. Tell us what your questions are so we can specifically answer your questions.
Stay safe.
Have a good day, guys.